I'm actually just long game. So this is outside. If you've been following me for a little bit, I told you guys I had sold 235 puts, and I got the shares put to me, and I'm showing you guys or walking through how I would make money on those shares. And we sold a 34 contract and and we sold some 33s. Right? I still have the 33s. I still have those 200 shares. This is actually a completely different position. But I grabbed a little bit of everything. Started off with an additional couple hundred shares. A couple hundred of me, guys, is not even 1%. So, would love to agree with the apes. I can't trade like that. But anyway, so just size reference. I don't want anybody thinking too much. After that, it just didn't seem like enough. After I was looking into it, and if you've been watching my videos for any time recently, then you know I've been trying to figure out the angle. Like, what is going on here? Because Keith, Roaring Kitty, he has 120,000 call options of the 20 strike for the 21st. So we have an expiration date. So we know something needs to happen there. Now, market makers, if they push it below $20, they'll be worthless. He'll lose every bit of that. Now, he's 5 million shares and 120,000 call options. And on YouTube, people they love to talk about the full value of like how much he actually has. If assuming all of those were shares accounted for, like it's not the case. Let's not worry about that right now. A call option, though, for those of you guys that don't know options, that just don't understand it yet, is this better? Someone said my videos were quiet. I meant to move the mic closer. Okay, so if you don't know what a call option is, say you want to buy shares. Let's just say a Walmart delivery. Let's use Walmart pickup service. Okay, so essentially it's you saying, I want to buy this, and this is what I'm going to pay for it. Okay, like any normal transaction. Here's when I'm going to be here to pick it up. So what Roaring Kitty has is he wants to buy for every one contract. He wants to buy 100 shares at $20, and he's going to be there on the 21st to collect. Let's see, that is going to be so right here. That's when he's coming to collect his shares. So we've seen a lot of things going on. First everyone's talking about, is the Roaring Kitty thing real? We've kind of debunked that. If the too many people looking into it, if it was not real, that I just don't think that could have been a secret. But now I think I figured out his game. I talked about it being a game of hot potato because he has 5 million shares and 120,000 call options, 100 shares apiece. How do you exit that position? You create some exit liquidity. Banks do this all the time. That's how they move in and out of positions. This is why people. This is just how hedge funds move things around. This is why they use algos to get in and out of things. So I thought the only way that guy could exit is he knows his posts are going to raise the price. He does it, leaves everybody else holding the bag. It's more. You can argue morals all day long, but that's just how the market works. And when you have that much money, you can do these things. What market makers do is the same thing you can do. It's all the same rules. You just typically don't have the capital to make moves like this. But looking at it, the market maker that sold him this is clueless, fell asleep at the job, something. He buys these call options. They are out of the money. Now, we talked about things being hedged and accounted for. So on the S&P right here, this is what market makers have accounted for. They take all the options data from calls and puts and say, okay, everybody's placing their bets here. Let's hedge for this. So when you buy a call, okay, when you buy an at-the-money call, that is a 50 deltas. Just put right at the money. Now, you are long 50 deltas. Again, options are soft deltas. Shares are hard deltas. So you're 50. That market maker that sold it to you is now negative 50. But market makers' job is to be delta neutral. They should not have a say in the game. So they'll end up going and buying 50 shares to hedge for your call option. That is delta hedging right there. So when they sold it to you, negative 50, they went out and bought 50. Now they are total zero. As things go up and down, their account shouldn't move, right? Okay. When we're outside of here, the 30 deltas, the 20 deltas, not really accounted for because they're so far out of the money that that's what the gamblers buy. And there's a reason why they lose money all the time. It just never happens. So it's kind of brilliant because he buys all these. They are out of the money, and a market maker is just asleep at the job, selling him all of these, not paying attention to what's being accumulated. So one person has this, and I called him just a whale in a pond, and it makes it very difficult. And now there's been cases made about manipulation. Now, if he sells that off of his tweets, that really does just make the case for manipulation. He had the intent to load up, tweet, make the price go up, sell to everybody in that hype. That is, if you can prove that intent, that's 100% just manipulation. But it gets more interesting because now if he holds his shares, now remember the order. Okay, so let's just say his call option is the Walmart order. He's going to buy a 100 pack of GameStop pencil erasers. And he just buys a whole bunch. And options are not connected to the actual market, by the way. They are delta hedged, but they're not connected to the float or anything like that. That's why if you buy a put and the company goes bankrupt, your put's just got max value. They can't go any further. You collect 100% of that money. So there's no questions of liquidity. Is it easy to grab these shares? Nothing. So he grabs all these. So again, goes to Walmart and goes online, says, and Walmart's guarantee, by the way, is if we don't have it in stock, we will find it for you. Just imagine that. So now he buys the 100 pack of erasers, buys 120,000 of those. He wants 12 million erasers. And on the Walmart app, it says, done. When will you be here? He says, I'll be there the 21st with my semi-truck. I'm going to pick them all up. I'm going to make sure every kid in this nation has a GameStop pencil eraser. Except one thing, they can't do that. One store doesn't have that. The market maker who sold him these has to go out. So if Keith says, pony up, I want my shares. I'm not selling my call options. I'm not flipping it for the premium. I wouldn't do that to my followers. This isn't manipulation. I bought that because I wanted the shares. Go get them. So if he does that and the apes, they don't sell, it goes up. Everyone's got a price. When you're looking at that your level 2 data, that's where everyone will sell their shares. Apes, they don't really have an order out there. Someone does. Some of the traders do, but you have to buy up that order book. There's 12 million shares out there. Now the market maker has to go find them. And the longer anybody holds, the higher that price is going to go. Which is why I did get in, because I think that's what he's doing. The guy he's already made hundreds of millions. This isn't a money thing. He likes to just, I guess, stick it to the man. This is exactly what happened in 2021. He forced the shorts out of there. Now, in 2021, it was like 120% shares shorted. So for every 10 shares out there, there were 12 shares short. It's just bad accounting. It shouldn't have happened. Again, people just fell asleep on the job. They got a little too relaxed. He did it this time with options. He snuck it in there, and now all he has to do is sit back and wait for his shares. And I think it's brilliant. I think a lot of people are going to watch a pump and dump. They're going to watch their P&L go up and come right back down. But I also think that's going to kill it. So I bought a couple things. So I bought my couple hundred shares. Then I bought some 35. Everything's up, by the way. I bought a couple 35 strike call options for what's the one before the 14th? 14th. But then I kind of wanted to be on this ride the whole time because I don't know when this happens or if everybody starts to figure this out and it starts to rise it up. I don't know if I'll be along for the whole ride. I just want some of it. Also, if it goes to zero, so be it. But I don't want to call it FOMO. I just got to thinking I need a little bit more, so I bought the 40 strike for the 21st, same as his. The shares I'll hold through this debacle to see what happens. The call options likely will get trailed tomorrow. Maybe the 40 I hold a little bit more. I only grabbed 5 of those. So I don't know. That's my play in GameStop. Now that's outside the selling calls against shares. That I'm still going to make those videos and talk about why I did that to bring my costs down and create an income off of these shares while holding them, because I do think a lot of people are holding shares and they don't want to be. What and where is your plan to get out of shares? Right now, this is why I didn't want to say it in the chat earlier, because I wanted to kind of say it all at once. It'd be a lot to type. I don't want to say I don't have a stop, but I want to see which way this thing breaks first. If it drops below 20, I'm probably going to just get out there, unless I see something, because I do think some trickery is going to happen. I don't think they're going to like just having this wedge just driven into them, these market makers. Now, a market maker can cover the cost of these, by the way. Yeah, they'll have a red trade. It's going to suck. They'll lick their wounds and they'll move on. But a contract is a contract. So if he sticks to his guns and says, I want the shares, that's where this thing happens. So there are some things that need to happen to pan out. I wouldn't call it a perfect storm, but you need to have some things fall into place. And I've never come on here and said, this is my play, I'm playing it by ear. And that's not really a trading strategy, and it's not a profitable one either. But he has to bring the money to Walmart to pay for the pencil erasers. Might not be a problem with the friends he has. You're right. Yeah, that's one of the pieces that needs to come in, is he has to buy those shares. He needs to buy 12 million shares at $20. How hard will it be to borrow that when I go to a bank, when I go to a friend that has millions and millions? Hey, need a couple million real quick? I'll give you 500 grand just for funsies. I need to buy this stock at $20. It's currently sitting at 40. I don't know if funding would be that hard. Let's see, those 40 calls, those bad boys are going for $530 a piece. I bought them for $450. So yeah, there's still some pieces. Now, as far as the shares go, the reason why I didn't want to sell calls on these, because I love just creating income. I like just make things cheaper. Who doesn't? The reason why I didn't is because we have so much pre-market and after-hours movement that if we got a ridiculous spike, that's when I would sell. I know the next day it might just go for it. What was it right here? Yeah, because the next day what I sell at like 39 or 42, somewhere right here. I think I sold in the 40s. I remember looking at it because it was ridiculous. I was like, I'm up a lot. I'm going to go ahead and take it. And then it goes to like 70-something. That annoyed me. But that's probably what will realistically happen again. If I see that spike, I'm going to call it and take it. Anything over 47-ish, 48, I do think, while it could end up being a wick, I think that's where people see a higher high. Momentum traders pile in. The problem with momentum traders piling in is they will pile out just as fast. So I'm entertained, but just watching from the side. Hopefully I do enough videos that you guys can just pop the popcorn and just, trade vicariously through me. Because who Dad says, he says, that's my problem. No exit plan. Yeah, and that's this whole thing's weird. This is not something I would call a strategy. This is not something I would say is repeatable. Because how often does something like this happen? It's not often that you can drive a wedge into a market maker or any kind of firm like that. One, get away with it. Because there's a lot of under the table deals, a lot of lunch talks that happen to make sure you guys can't do this. But it just seems to be he picked the right ticker, because you can play this game on a crap stock. Yeah, and that market maker will sell it to you. And then they'll drive that price right back down and keep all your money and say, thanks for playing. Just like anyone at a carnival. You want to try again? Pick another one. This particular one, he has the following on social media. It had the right float. He was able to accumulate these calls. So I think I don't know if this happens again. But, yeah, I'm 100% honest with you guys. I'll go over the play, and that's why I got in. I don't want to say it's risk and capital, but if this thing went to zero, if they said, I'm tired of the manipulation, remove GameStop off the exchange, and I lost all my money, it'll just be a YouTube video talking about that, and I will move on that night. To be very clear on where this goes and how much money I would lose. But yeah, that's where I'm at on these. So I hear you on the no plan thing. I don't know if I've ever come on here and just said, hey, I'm winging it. Who wants to play follow the leader? Because it's definitely not something you should do. I see the play if it pans out. A little bit more intricate than I see my 0 day to expiration calls panning out if it goes up. You know, I see the reason. Maybe I'm wrong, but I see a path, and so I wanted to play it. And this is one of those things where I might exit and make a great profit. You know, and if a trade is going to go from 1 to 100, and I just bought at 1, I might sell at 20 and be happy. And then I might watch it go up to 100 and think that would have been cool if I stayed. But there will be zero FOMO with this. Who does this? I'll say it. I'm winging it. So far, everyone I know in my chat that's in this, I see the way you guys trade, and I haven't had conversations with you guys on why that was a dumb play. So that's where I worry about. The people that are going to follow but have no idea what they're talking about, this is not the trade for you. If you don't know what risk is, if you've ever bag held a ticker and you still have that habit, this isn't the one. Okay, cut your teeth on something different. But if you understand risk, what you're actually getting into, then tell me what you're in. At this point, I'm popping popcorn with you guys. Mine could be a much more expensive popcorn, kind of like that gold flake stuff that is ridiculous because you eat it and it goes away. So I might be eating like the gold flake popcorn. Anyway, I'm gonna wrap that up here. So that's my play. Let me know just let me know in the comments. Are you playing this? Do you know what you're doing? That's what I need to know.